Hey, Brad Garlinghouse. In fact, that was Brad Garlinghouse. The CEO of Ripple just said something at Davos that shocked people in the banking world. And I need you to hear this before the market acts too much. But before we can understand why this is important, let's set the scene. Because Brian Armstrong is where it all began. Steve Armstrong, CEO of Coinbase, was just on Fox Business. One of the biggest blockchain-based businesses in the US is run by him. Everyone who invests in the United States should pay attention to what he said. Armstrong said that the biggest banks in the United States are working hard to stop the Clarity Act. Yes, the same bill that is meant to finally make it clear how crypto is regulated in the US, the same clarity that politicians have said they would give for years. Armstrong said he read the draft letter by letter with a marker in his hand and was shocked by what he saw. According to him, a lot of the bill is written in a way that clearly favors traditional banks over companies that are new to crypto. Now think about when this will happen. All of this is happening at the same time that Trump is making a big push for crypto. The story says that crypto is finally being accepted, but the banks are moving quickly and quietly behind the scenes to keep their turf safe because this is the truth. Banks know that crypto isn't just a trend. It's not a toy. It's not going away. Crypto is going to be used for daily tasks like payments, deals, storage, tokenization, and even breakfast, lunch, and dinner. And what do groups that are already strong always do instead of going up against each other? Their race is slowed down by rules they set. But now things start to get interesting because Armstrong did more than just show the plan. He pushed back. He told everyone that they had already become law, which showed that banks and crypto can live together. It became allowed to give stablecoin rewards. A middle ground was found. Now all of a sudden those same banks are trying to stop the president's bigger crypto plan. Another thing that Armstrong said struck a nerve. These are the same banks that used to turn politicians and their families away from banking. Now they want to say that Americans shouldn't be able to get a better return on their own money. Why? For the reason that it cuts into their profits. The government takes money from regular Americans and gives it to businesses that are making record gains. Neil Armstrong took a simple stand. Everyone should have the same chances. Crypto companies and banks should both be able to be a part of stablecoin law. That also means giving awards. Americans should be able to make more on their money instead of seeing it disappear due to inflation. Stop right now. There's more going on here than just politics. This has a direct effect on whether the US becomes the world's crypto capital or if South Korea, Singapore, Japan, or Dubai take that title instead. Right now, the banks are moving. Jerome Powell, on the other hand, still won't cut rates, though. It was even Trump himself who said in public that the Fed messed this up so badly that interest rates need to be cut right away. Here's the part that matters for your stock, no matter what your political views are. Powell only stays for a short time. A lot more rate cuts are likely to happen under the next Fed chair. Things change when that takes place, because one thing works really well when loan rates are high. They hold on to cash. Bonds, money markets, and savings accounts are all places where money stays put. Things that are risky go hungry. But as soon as rates start to go down, a lot of money comes back into the system. And money doesn't just move into Bitcoin when liquidity comes back. It gets into everything. Stocks, tech, growth stocks, and yes, altcoins. This is where XRP stands out from the rest. XRP is right where clear rules and high demand from institutions meet. It is not just another tool for speculation. It's talked about when people talk about payments, settlements, cross-border cash, and tokenized finance. And unlike most projects, it has already fought and survived years of pressure from regulators. When things become clear, XRP won't be starting from scratch. The plane is already on the runway. Add one more layer on top of that. Banks are against stablecoin awards because they know what will happen when people find out they can make money in ways other than the normal way. Deposits go away. Power changes hands. Loss of control. Thoughts on a rate cut by the Fed in the next 60 days? By the end of the first quarter? Please share your ideas below, as this is a real question that needs an answer. But instead of guessing, I asked Claude to help me figure this out in a way that makes sense. Of course, my phone rings right then from a number I don't even know, a 540 number code. I have no idea where that is, but let's keep our attention on the present. It's pretty clear what the argument is about when you look at the chart and the statistics. Now, inflation is less than what the Fed said it would be. We're at about 1.5%. Based on the Fed's own rules, that means the job has been done. There is no longer any inflation. So now the question is, why are rates still this high? The case is easy to understand. The Fed could over-tighten things if inflation is already below goal and rates stay high for too long. That doesn't need to slow down economic growth. It makes it harder to get credit, which hurts small businesses and puts pressure on consumers. It also makes it more likely that something will go wrong with the system. So it makes sense that the result is clear. Rates need to go down so that they don't hurt more than they help. What do you want us to do, Jerome? At some point, you have to say that the job is done. There is something else going on in the background while that conversation is going on. This is where everything fits together. Don put this out there, and he did a great job. He said, I called this 2 days ago. Stablecoins are the most dangerous thing for banks. Just when we needed it, we get proof from the source. There is proof that the CEO of Bank of America knows that stablecoins are changing the way businesses compete. Take that in. There is no doubt that stablecoins are a real threat to banks, as this CEO of one of the biggest banks in the world says. How did he say it? Not a blow-off? Not certain? He spoke as if he knew the time was running out. Because think about it. Stablecoins let people send money quickly and around the world with almost no fees. Few or no correspondent banks. There will be no 3 to 5 day deal. There are no $40 wire fees. There won't be any agents cutting tickets at every turn. It goes faster. It costs less. It's more useful. There are many ways to tell that it's better. This is the exact reason why banks are working to stop the Clarity Act. Why would someone want to use a regular bank when stablecoins are so popular? A steady coin can be used to store dollars. You can get return. It's quick and easy to send anywhere in the world. A stablecoin account often gives you a higher return than a checking or savings account at a traditional bank. So think about it. Why would banks want that future to come faster? They were not going to. This is the part that most people miss. Who has been putting this machinery together for years? In peace. Be patient. Through lawsuits, government threats, and news stories all the time. The XRP and Ripple. The on-demand liquidity system was made to replace the old correspondent banking lines that banks have been using for many years. That's why the CEO of Bank of America says stablecoins are a threat to their business. That's not having faith. That's fear. Then Ripple sends this. Now things really start to get interesting. Ripple has just officially asked the SEC to recognize XRP under a regulatory system based on its lifespan. This is very important. Ripple is saying that XRP has changed over time. Think about what it is now, not what it was in 2013. The network is spread out. It's clear what the use case is. Being liquid, paid for, settlement, and everyone knows it's not safe. One thing that will happen is that the SEC will respond to this. That's a big if, but bear with me. Not just for XRP, but for all of the cryptocurrencies. In the US, it goes away from regulation by enforcement and toward clear regulation. Also, look at the time. You have a government that supports crypto, a new head of the SEC, inflation below the goal, markets are ready for the go-ahead. Ripple stepped up and said, we're ready, let's do this the right way. Ripple's main point is easy to understand but strong. Not every digital object is a security. Assets that are mostly used for their usefulness shouldn't immediately be labeled as securities. Laws should make it clear that different types of digital goods are not the same. That makes sense. But there hasn't been a lot of common sense in this area. That's why this is so important. Ripple is no longer scared. Check out the business world. Where is Hoskinson Charles? What's up with Satoshi Nakamoto? Where is Buterin Vitalik? Where is Lubin Joe? They're not in Washington, D.C. Their fight with officials isn't direct. Ripple is it. Stuart Alderodi even said, it's time to do something. That's not being frustrated. That shows trust. That's a business that already knows it's following the rules, telling the government to catch up. That kind of talk doesn't make sense unless you know how this ends. Don't forget that Ripple has had many talks at the White House. They went to court against the SEC and spent a lot of money. It took years for people to clean up their bad name. Still, they didn't give up. They stayed in the country. They didn't stop. They are now going up to politicians and telling them, we did our part. It's your turn now. That's how a great team stands. They are no longer asking for approval. What they've built over the last 13 years is what they want to be recognized for. When things get tough, most projects fall apart. They fold, they turn, they move to another country. But Ripple didn't. Ripple kept getting bigger. Ripple kept taking off. Now, the infrastructure they've been building in secret is perfectly aligned with changes in the economy, regulations, and institutional demand. So it's not random that inflation is below goal. Rates will have to be cut. Banks are saying stablecoins are a threat, and Ripple is pushing for official recognition. That brings us to the real speed. This one just came out, just out of the press. UDEX has been publicly launched by UC Berkeley and Ripple, the digital asset accelerator for the university. Take a moment to think about that name. This is a test program that aims to turn new ideas from academia into useful XRP for institutions. Yes, XRP is useful for businesses. Not ideas, not plain paper, not one day, real use cases for businesses. And this is the goal, plain and simple. UDEX is there to connect founders directly with Ripple engineers and global blockchain-focused venture capital firms to help early-stage ideas make it to market and to help business solutions use XRP on a larger scale. We're not trying to build our brand here. Building infrastructure is what this is. There are a few very good reasons why this news is bullish. First, approval by institutions. It sends a message when a top university like UC Berkeley works directly with Ripple. Academics don't get involved with projects they think will only last for a short time. This means that XRP is being seen as a basic tool. Second, a path for real-world applications. These are real use cases, not just ideas. The clear goal is to use XRP to build apps that can be used by institutions. In the long run, that's the kind of demand that counts. Third, the route for talent and new ideas. You can make an ecosystem that supports itself by linking academic projects with Ripple's engineers and venture funds. Solutions built on XRP have easier access to technical support, funding, and ways to be put into use. That's how the network effect works. All of that is important, but it all leads to the big event. The thing that most people miss is this. At Davos, the World Economic Forum, Brad Garlinghouse is speaking, and all of a sudden, the other crypto CEOs are very quiet. That difference tells you everything you need to know. Brad isn't running away. Don't wait for him. He's arguing for crypto, XRP, and the future of cross-border payments on the world's biggest business stage. That's not just guesswork. That's being a leader. When it gets dark, real infrastructure doesn't change direction. It turns up. It goes twice as far. It leads. Pay close attention to what Brad says. It's always better to have order than chaos. And the business world needs to be clear. Does the market system bill make sense? No, not at all. Is it still better than nothing? Of course. Washington and I need to keep working together in a positive way, and we need to keep improving what's already in front of the banking committee. We shouldn't give up now, though. We're really close. That last line is important. We're really close. Leaders are rewarded by the market. Maybe not right away, but eventually. We've seen this show before. Amazon when the dot-com bubble burst. Apple when everyone thought they were doomed. The next cycle is won by the companies that keep growing while everyone else panics. Pay attention to what Ripple does, not the noise. They are giving evidence to the Senate. They are starting accelerated programs at universities. They're making deals with banks in countries all over the world. They have a conversation at Davos. That's what a real business does. Ripple won't be scrambling when legal confusion clears and institutional capital is finally put to use on a large scale. They'll already be set up. There is also something exciting going on in the market at the same time as all of this policy and infrastructure work. Korea is a good example. The biggest exchange in South Korea, Upbit, just reported that it handled over $128 million worth of XRP in 24 hours. And now for the important part. On that trade, XRP was faster than both Bitcoin and Ethereum. That's not a lie. That's money flow. This is not advice about money. Now ask yourself this. Why is a token that was only ever meant to be used for payments now controlling most of the trades on one of the world's largest exchanges? Since the use case is real, because the buildings and roads work, because XRP moves big amounts of money across borders quickly, cheaply, and reliably. In the end, markets credit what works. And that change, we're seeing it happen right now. Now zoom out and link everything together. Brad Garlinghouse in Davos. Ripple is pushing for clear rules. Universities are making business solutions based on XRP. Banks are saying out loud that stablecoins are a threat. Global liquidity is beginning to rise. It's not a coincidence. This is how you connect. I've said this before. This moves faster under Trump. Powell won't stay for long. Rates are going down. The system will have liquidity again. During those times, crypto doesn't move slowly. It moves very quickly.